the back half of the year, you had a few different puzzle pieces happening, including one of the things you pointed out that was like the evidence that we discussed was that Microsoft was making changes to its headcount very abruptly after going from competing for global talent in late May to a hiring freeze to small firings. And those were sort of tells along the way for us that helped us understand that Microsoft Business was inflecting from one direction to another direction, from the growth that they had expected to less than that. So maybe like you press like right after the quarter, like the morning after, it's fine. That's a great idea. I'm good with that. And I'm just talking about like pacing here, not really changing the recommendation. It's a quad 4 short. And it's definitely too expensive to get excited about. Not all is so amazing and so great in that corner of the globe.
On Friday, and I'll get to Freedman in a second. I mean, I have a choice, right? I mean, we're short Tesla, Google, and Microsoft as a research team. So I could have shorted any one of those three or all three. And I picked 2 of the 3, and one of the 3 was not Microsoft. Imagine that. And I just said why. It's not at the top end of its range. I went from 28 shorts to 8. It's not like I did that randomly. I mean, we're getting close to the low end of the range, or at least there was like a fair fight on a lot of these ranges, including Microsoft. And that's what I did. So I'm not sitting there Friday afternoon lamenting and, trying to join the crybaby club and everybody's telling, because that's what Wall Street does, right? It's like if they all got squeezed on Friday instead of having covered a bunch of shorts on Thursday, they want to, it's what's Wall Street's nature. They want to know that everyone's losing together. Google's right at the top end of the range. So that one's not like kind of there. It's not even remotely close to this discussion as Ami. And I'm pretty sure that your comments on Google are that they're going to surprise to the downside faster than people think, whereas Ami's, talking a little differently. The dynamics of what happened yesterday to what will really happen in 6 months, even though Microsoft probably won't acknowledge it.
Their exposure is a lot different than other parts of the advertising ecosystem. So, they have more exposure to the brick and mortar retail, travel, the services economy a little bit more broadly. Continue to, we're still short Google. And just on that, I know Ami mentioned Microsoft, but there are 2 small pockets within Microsoft that are going to be interesting read-throughs potentially for Google, in that they have LinkedIn and search, and also Bing as well, which is their search engine. LinkedIn's interesting just because if there's, we see this in the app download data, just given its exposure to the labor markets, right? They saw a big increase in demand related to recruiter activity, when the job market was really hot, and we've seen that slow down pretty significantly here just with the recent layoffs and the deteriorating environment we're seeing across the labor markets. So be watching that one closely. And then obviously search revenue for Bing is also interesting. It's a very small percentage of the overall search market, well under 10%, where Google is the vast majority of that. But it's still going to be another interesting data point to get at as we contemplate Google's earnings here coming up in the next couple of weeks.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.